China keeping its benchmark rates unchanged. Let's get to Eunice Yoon in Beijing with some takeaways. Hi, Eunice.
Hey, Carl. Well, the central bank didn't act, but it did leave open the possibility that it could. No moves for the reference for most household and corporate loans, that is the one-year loan prime rate, as well as the 5-year, which influences mortgage rates. But a central bank newspaper also hinted that the People's Bank of China had room to cut. In addition, the bank governor had repeated that the monetary policy was going to maintain an accommodative stance. This is at a financial forum on Wednesday. Now, investors here see two key takeaways from the governor's speech. One, that China is done with the whole credit boom thing. He told industry players that it would be difficult to maintain an overall credit growth of over 10% as seen in the past. Now, this is exactly how the Chinese government was able to stimulate during the 2008 financial crisis. And one of the reasons people here see the rising debt as well as the bloated property sector. As for the takeaway two, China is experimenting with different forms of monetary policy. He said that China would gradually, quote, include purchase and sale of Chinese government bonds on the secondary market in its toolkit. Now, a lot of people think that that sounds like QE, but the governor actually mentioned that, saying that this does not mean quantitative easing. So the move is still undefined, but it is still an indication that the bank is looking for other ways that are not really so traditional to stimulate the economy. Guys?
Eunice, why would that be? Why wouldn't they just go ahead and cut to bolster? Why are they departing from the traditional ways they've used in the past?
Well, it looks as though they don't want to have a credit expansion here. They don't want to have even more because of the associated risks. So it looks as though they're trying to find other ways in order to stimulate the economy.
And right. Eunice, how does the currency calculus fit into this, if at all?
Well, the concern, of course, here is that the currency is going to continue to weaken. And so that's one of the reasons why you're seeing the government here really take steps, kind of smaller steps, as opposed to anything that's massive. There's been a lot of questions that the government here should be taking up some other major stimulus. And the hope is that we would get some clarity as to whether or not they're going to make any bigger moves, or if they're going to continue with this approach later this summer in July. That's when the government here is going to hold what's called the third plenum, and people are really watching this because they think that it could eventually lead to some announcement of a long-term economic strategy. That's traditionally where we've seen this kind of discussion.